With cryptos back in the bull season, many investors are starting to look into investing into crypto again. However, if you are a beginner, the crypto world can feel overwhelming with its complex jargons, numerous scams, and various potential pitfalls that can make navigating the market a daunting challenge. That's why in this video, I'll be covering everything you need to know with investing into crypto, from the basics of how crypto works, how to research about crypto projects, how to invest in crypto, step-by-step guides, as well as some of the best practices that you need to follow to keep yourself safe. I will add chapters to the timeline so that you can jump to the section that you want. Also, just a disclaimer, investing into crypto is extremely risky and is not suitable for everyone. So please do your own due diligence before you dabble into it, yeah? If you have any questions, I have a Telegram chat group which you can join to discuss and ask any questions that you may have. First up, what is cryptocurrency? To understand that, let's look at cryptocurrency in its simplest form, a transaction. Here, we have a Bitcoin transaction. In this transaction, this person is sending a total of 0.3115 BTC. The transfer costs $24 to perform, and he's sending the Bitcoin to this address. Then it also has other information like when was this transaction posted, what was the price of Bitcoin at the moment, and so on. Besides currency, you can also send data. For example, in this Ethereum transaction, someone is selling an NFT to another person. This NFT costs 0.3 ETH and the transaction costs about 0.016 ETH to perform. Not just that, it's also possible to send instructions. Like here, we have a transaction to swap cryptos. In this case, this guy is converting his people coin to ETH. In short, a crypto transaction allows us to store and share information. This information can be anything that you want. It can be money, it can be NFT, it can be instructions, and so on. Every few minutes, these transactions are grouped into a block. The block is then linked to the block before it, and together, they form something called the blockchain. Here's a visualization to help you understand this better. Each of these South Park characters represent a transaction. They are all queuing up to enter a bus. This bus is a block. If I click on the bus, you can see how full is this block, what are the fees paid by each transaction, and the total number of transactions. Once this block is filled, the bus then drives off and gets added to the blockchain. Once added, this data cannot be changed, edited, or deleted. The term for this is immutable. This prevents people from tampering with the records to steal funds or reverse payments. Because of that, you can fully trust that the data is 100% accurate and has not been manipulated. Now, the reason the blockchain can't be modified is because there are a lot of copies of the blockchain saved on many machines all around the world. And by a lot, I mean a lot. All of them need to match in order for the copy to be valid. And the more copies you have, the harder it is for hackers to hack the network. But here's a question. Who is doing all the work? And why are they doing it? Here's where crypto mining comes in. Crypto mining is validating transactions and adding them to the blockchain. There are two main types of crypto mining. One is proof of work, another is proof of stake. In proof of work, miners all around the world are competing with each other to see who can solve a math problem the fastest. The winner will get to receive some cryptos as a reward. Bitcoin is one such crypto that uses proof of work. As you might imagine, this is very energy intensive. So unless you have very specialized hardware, most people would be better off buying the crypto directly instead of trying to mine it. On the other hand, proof of stake doesn't require any specialized hardware. All you need to do is just stake your crypto to the network. Miners are then randomly assigned to validate blocks and will get rewarded accordingly. Cryptos that uses proof of stake include Ethereum, Cardano, and Solana. For example, here I'm staking my Cardano, and every few days I receive a small amount of crypto in return. But how much returns are we talking about? Check this out. For the major cryptos like Ethereum and Bitcoin, the total fees per day could range anywhere from $2 million all the way to $5 million. And that's just per day, yeah? That's why competition is still so fierce despite the high cost of entry. But what exactly is crypto trying to solve? Many people think that the main purpose of crypto is to make you a millionaire. Yes, that's one use case. But crypto has way more uses than that, with the first one being a store of value. You see, the original idea of Bitcoin is to create a peer-to-peer electronic cash system, a system which allows you to transfer money to one another without having to rely on a third party, like a bank or a payment system like PayPal. With it, you will get to cut down on third-party fees, speed up transfers, and most importantly, bypass restrictions. So at the start, you have many people treating Bitcoin as just any other currency. You could buy pizzas with it, you could withdraw it from ATMs, you could even spend it at your neighborhood shops. But over time, people came to understand that Bitcoin isn't just a currency, but rather is more effective as a store of value. That's because while our fiat money is convenient and easy to use, it's susceptible to devaluation through money printing. For example, over the past 100 years, the value of the US dollar has fallen by 90%. And this is already considered quite mild. In some cases like Venezuela, Zimbabwe, and Yugoslavia, their currency literally become worthless overnight due to hyperinflation. And that's where Bitcoin comes in. That's because Bitcoin has many properties that are similar to gold but better. While gold has been a fantastic store of value with a super long track record, it has a number of downsides. For example, gold is not easily divisible, meaning you can't easily break gold down into different pieces. It's not portable. Gold can be heavy and hard to carry around with you. It is not easily verifiable. You can get counterfeit gold if you are not careful. And while gold is scarce, new gold supplies can be found from time to time, and this can affect its value over time. Meanwhile, Bitcoin is easily divisible, it is portable, you can access it anywhere as long as you have access to the internet, it is verifiable, and is scarce as there will be only 21 million Bitcoin in the world. Meanwhile, fiat currency just scores badly in almost every category. Because of this, both corporations and world governments are starting to slowly recognize the potential of Bitcoin as a possible store of value. Next, besides being a store of value, cryptocurrency can also function as programmable money. The term for this is Decentralized Finance or DeFi, and it covers every application that you can imagine. For example, Uniswap is a decentralized crypto exchange that lets you swap your cryptos. Aave is sort of like a bank where you can lend and borrow cryptos. Lido lets you stake your cryptos to earn a yield. Nexus Mutual lets you buy insurance to protect against different kinds of risks. Akash lets you buy and sell computing resources to do stuff like hosting websites and training AI models. Polymarket is a prediction market site which lets you bet on the outcomes of real-world events, and the list just goes on and on. DeFi offers several benefits which makes it an attractive alternative to traditional applications. For example, it is borderless, the codes are usually public, which makes them easily auditable and transparent. Users get to retain control of their funds without needing to trust them with a third party. And because there's no third party involved, the fees are typically a lot cheaper as compared to traditional finance. Besides that, one other use of cryptocurrency is to function as something called a stable coin. As the name suggests, stable coins are designed to maintain a stable value relative to an asset class, typically a fiat currency. The two largest stable coins are USDC and USDT, which maintains an almost 1-to-1 value to USD. Or in Singapore, we have XSGD, a stable coin that is pegged to the Singapore dollar. These are useful for doing stuff like cross-border payments, transacting in the crypto space, plus you can even lend them out to earn a yield. Though, just be aware that not all stablecoins are stable. For example, back then there was this stablecoin called UST, which you could lend out to earn a 20% yield. However, unlike most stablecoins which are backed by real assets, UST maintained its peg by relying on minting and burning of another crypto called Luna. As investors lost confidence in the UST's peg, this triggered a huge sell-off and the UST stablecoin eventually collapsed. Lastly, you have the crowd's favorite, meme coins. Some examples of them are Dogecoin, PBCoin, or even the recent Hardtua coin. Meme coins are often created as jokes or parodies, driven by internet culture and community hype, rather than technological utility or fundamental value. These cryptos are very high risk and they serve no other purpose other than for traders to speculate on. Now, even though there are tons and tons of cryptos out there, depending on their functionality, each of them may sit on different levels. At the lowest level, we have the layer 0. This is the foundation layer that enables blockchain interoperability and the creation of other blockchain networks. It consists of the hardware and equipment required to run the network and the consensus mechanisms. Some examples of layer 0 cryptos include Cosmos, Polkadot, Cardano, and Avalanche. Then we have layer 1. This is the primary blockchain, where transactions are validated and executed. Examples of Layer 1 cryptos are Bitcoin, Ethereum, and Binance Smart Chain. Then, Layer 2 is built on top of Layer 1 to improve its scalability, fees reduction, and speed enhancement. For example, Polygon is built on the Ethereum blockchain to improve its scalability. Lastly, we have Layer 3. Layer 3 is used to build decentralized applications such as Uniswap, OpenSea, and Aave. Now, take note that some cryptos can operate across multiple layers and blockchains. For example, USDC exists on both Layer 1 and Layer 2. And if you open up CoinMarketCap and check its contract, you will see all the blockchains that support USDC. Here's another example. While Polygon is a Layer 2 crypto, it can also integrate with other blockchains. To move your crypto across different blockchains, you need to do something called bridging. So let's say your ETH is on the Ethereum blockchain and you want to move it over to the Binance Smart Chain. To do that, you can use a decentralized app to bridge your ETH over to a new blockchain. Next, just like any other investments, you should always do your research before investing into cryptos. So in this section, I'll be sharing some tools to help you with your research. I will also be linking all these tools down in the description below so that you can easily reference it later on. Alright, whenever I want to find out about any crypto, the first place I always start is at CoinMarketCap. This is a website that has comprehensive information on prices, market capitalization, trading volume, historical data, and trends for thousands of cryptos. So let's say you want to check out this crypto called Avalanche. On the left, you will see all the important metrics such as the crypto price, what's the current market cap, current total supply that's in circulation, and the maximum supply once everything is fully unlocked. For example, right now, only 57% of the cryptos is in circulation, and there are more on the way, which could further dilute the value of the crypto. Further down, you will have all the official links, such as the crypto website and the white paper. A white paper is essentially a document that outlines the crypto's purpose, technology, features, and roadmap to provide insights into how the crypto works. While reading the white paper, here are some things that you might want to pay attention to. Does this crypto solve a real-world issue? Is the solution practical and valuable? What are the tokenomics of the project? How do they plan to distribute the cryptos? Are the milestones realistic and clearly outlined? Who are the developers? Are they credible? Does this project have any competitors? Also, look out for any red flags, such as vague language, unrealistic promises, or lack of technical details. Back at CoinMarketCap, you will see links to the social websites, such as its official Twitter accounts, subreddit, GitHub page, Facebook, Telegram, and so on. These are good places to get the latest updates from the developers, while also finding out what the community thinks about the crypto and whether the developers are responsive to queries or not. Over to the right, you have the price chart, which you can play around with. Below it, you'll see which exchanges is this crypto available on. One thing I like to do is sort the exchanges by the trading volume. That's because the higher the trading volume, the better bid-ask spread that we will get. Further down, you will find some latest news about this crypto. What is the yield that you can get if you were to lend or stake this crypto? What is the unlocked information of the crypto, such as how it was distributed, what's the unlock progress, and what's the unlock schedule of the crypto. You will also see some analytics, such as the number of addresses that have this crypto, the number of whales. It even shows you the percentage of traders versus holders of this crypto. Some brief information about the crypto and how it works. And finally, over to the right, you will see a quick overview of what's the current sentiment of the crypto, as well as mentions on social media. Okay, the next tool that you want to check out is DeFi Llama. DeFi Llama is useful for monitoring different projects in the DeFi ecosystem and exploring their fundamentals. If I click on the chains page, we can see a breakdown of total value locked by chains. This is the amounts of funds that have been deposited into the ecosystem to do stuff like staking, lending, providing liquidity, and so on. A higher TVL means that there's higher trust and adoption of the platform. And right now, the biggest chain is Ethereum. Now, let's say you want to check out this crypto called Solana. You can see how it's growing over time. For example, right now, there's around $10 billion of TVL in this chain. This is pretty close to the previous TVL during the previous bull run. So it seems like investors are starting to slowly come back again. Besides that, you can also see how much it earned in fees and revenue over the last 24 hours. And further down, what are some of its most popular protocols? Okay, there's something cool that I want to show you. If we head over to yields, we can see where are some of the popular places to earn a yield on your cryptos. For example, let's say I have some Ethereum and I want to earn a yield on it. Lido is currently giving around 3% yield for it. Though, just be aware that even though this lets you earn some additional passive income, these are not entirely free money, because there are always risks when it comes to these things. For example, the project can be hacked or your cryptos may be locked out for a certain duration. So please study the project carefully before handling your crypto over to them, yeah? Another website that is similar to DeFi Llama is Artemis. Here, you'll be able to see how each project is doing, like what are the daily transactions, economic activity, application activity, user analytics. Then there's also the sector breakdown. What are the net flows by chain, developer activity, and so on. If you wish to do technical analysis, you can head over to TradingView. TradingView is a powerful online platform that provides advanced charting tools, technical analysis, and real-time market data for a wide range of assets. So let's say if I search for Bitcoin, it will show me all the Bitcoin pairs that are trading across various exchanges. I can then play around with the chart, add technical indicators, compare against other cryptos, add price alerts, and replay price movements and more. However, there are times where certain cryptos that you are searching for don't appear on TradingView. This could be because the cryptos are very new and are not listed on major exchanges yet. In that case, you could use the DEX tools instead. Here, you can do your usual charting stuff, but it has a few more additional useful features. First, you will get some quick data about the crypto itself, like the market cap, liquidity, circulating supply, number of holders, and so on. But the one that's more important is the DEX score. This gives you an initial idea of whether the crypto is a potential scam or not. The lower the score, the more likely it's a scam. If you click on the check audits button, you will see audits by external parties. In this case, Quick Intel listed this crypto as a potential scam risk. So if you invest in this crypto, there's a very high chance of losing your money. Then if you click on the holders tab, you will also be able to see the top few addresses that are holding this crypto. In this case, just one wallet alone holds almost 17% of the crypto. The risk is that he can suddenly sell all the holdings and crash the market. Speaking of holders, another tool which you can use to check the top holders is Bubble Maps. This lets you see all the top wallets that are holding this crypto, as well as whether they have interacted with one another or not. Sometimes you see the cryptos being concentrated to just a few wallets. There's a chance that it could be a scam. For example, these wallets alone holds over 42% of the holdings, while the rest are split across a few big holders. This is an obvious red flag and a strong signal to stay away. Next, Account Intelligence is an amazing platform that you can use to scrutinize blockchain addresses, inspect transactions, track fund movements, and investigate counterparty connections. For example, let's say you are interested in what cryptos a certain president invests in. You can search for his wallets to see what he holds, where he holds it, what is his profit and loss history, what are his transactions, and so on. Then, if you click on the Visualize button on the top right hand corner, you can also see all the other entities that he has ever interacted with. This isn't just useful for tracking someone's transactions. Let's say, back at CoinMarketCap, you saw that some organizations are investing in your favorite cryptos, and you are interested to find out what else are they investing in. You can also search for them using Account Intelligence. Then, if you want, you can even create alerts to get notified whenever they perform any transactions. Besides fundamental and technical analysis, one useful way to predict the performance of a crypto is by monitoring its social sentiments. For this, you can use a tool called Luna Crush. This tool lets you trade the latest trending tokens by social activity, mentions, articles, and trading volume over time. For example, if you open up a coin, you are able to track its engagement level, number of mentions, and the sentiments of the crypto. Then, over in the trending page, you'll be able to see all the trending cryptos measured by the amounts of current social engagements. This is especially useful if you are a crypto trader. Last but not least, if you just want to learn more about the crypto world, here are some crypto-related subreddits that you can follow. Each of them focuses on different topics. For example, if you are interested in general crypto discussions and updates, you can follow the cryptocurrency subreddit. If you are interested in DeFi topics, you can follow the DeFi subreddits. Or if you are interested in altcoins and projects, you can follow the altcoin subreddit, and so on. So those are some of the tools that you can use to research about cryptos. Obviously, this list is not comprehensive, and there are a lot more ways that you can do research. For example, you should always look for interviews about the founder to further determine his intentions, visions, and motivations for the project. And while you are watching people who are bullish about certain cryptos, just be aware that they are generally biased. And you always want to keep a balanced perspective by forming your own conclusions rather than relying on someone else's opinion, yeah? Next, let's talk about how you can invest in cryptos. There are two ways you can do that. You can either buy the cryptos directly, or you can indirectly invest in them by buying crypto ETFs. Each of them has their pros and cons, but the main benefit of investing in the crypto ETF is that there's very little technical expertise needed. All you need to do is just open up your favorite brokerage, look for the crypto ETF, click buy, and you are done. So simple. However, there are several downsides to investing in a crypto ETF. First, you don't have full custody of your own crypto. Instead, the ETF provider controls the crypto. So if ever the crypto gets stolen or the ETF provider collapses, you can stand to lose all your cryptos. This is because the crypto itself is not insured by FDIC or SIPC, though the chances of this happening is quite slim. That's because the providers typically use a number of security features to protect the crypto, such as storing them in cold storage, redundancy, privacy settings, as well as multi-step processes. Second, crypto ETFs generally have an expense ratio of anywhere between 0.15% to 0.25%. So, for example, if you invest $100,000 in a crypto ETF, you could be paying anywhere between $150 to $250 in fees every single year. On the other hand, there are several benefits to buying cryptos directly. First, you have full custody of your own crypto, so there's no third-party risk here. The safety of your crypto will depend on you and yourself alone. Second, you won't have to pay any recurring fees. The only fees that you have to pay is the one-time trading fee, the crypto transfer fee, and the cost of buying a cold wallet. That's all. However, the downside of buying cryptos directly is that there's a higher technical expertise involved, such as setting up your cold wallet, transferring your cryptos from the exchange to your wallet, and keeping your seed phrase safe. The risk here is that if you accidentally transfer your cryptos to a wrong address, lose your seed phrase, expose your seed phrase to someone else, or your wallet gets hacked, you could lose all your cryptos. And the risk for this is very real, as it happens on a daily basis. So there's no right or wrong here. If you prefer the convenience and simplicity of buying a crypto ETF, you rather just let someone else safekeep your cryptos and you don't mind paying the small recurring expense ratio, then just go for crypto ETFs. Otherwise, if you are a little paranoid of financial institutions collapsing and you don't trust anyone else but yourself to keep your cryptos safe, then by all means, just buy your cryptos directly. Now, let's say you are interested in the easy route and go for crypto ETFs. I've compiled a list of the best Bitcoin ETFs and Ethereum ETFs. So far, these are the only two classes of crypto ETFs that have been launched, though more of them are coming soon. Among the Bitcoin ETFs, the Grayscale Bitcoin Mini Trust ETF with the ticker symbol BTC has the lowest expense ratio of 0.15%. However, Grayscale has some rather questionable history, such as refusing to share their proof of reserves. So if you don't want to have anything to do with them, the next cheapest Bitcoin ETF would be the Franklin Bitcoin ETF, ticker symbol EZBC. This ETF has an expense ratio of 0.19%, though for some reason they aren't as popular as all the other ETFs, as they have the lowest total net assets as well as average volume when compared to others. So if you prefer a more popular Bitcoin ETF, then you may want to go for the Bitwise Bitcoin ETF, which charges a 0.2% expense ratio and has a rather high $4.2 billion total net assets and 2.4 million average volume. Next, among the Ethereum ETFs, the Grayscale Ethereum Mini Trust ETF with the ticker symbol ETH has the lowest fee of 0.15%. But again, if you don't want to have anything to do with Grayscale, the next cheapest ETF would be the Franklin Ethereum ETF, ticker symbol EZET. This ETF has an expense ratio of 0.19%, but is the least popular ETF in terms of total net assets and average trading volume. So, if you want an ETF that is more popular and has more trading volume, you could go for the Bitwise Ethereum ETF, ticker symbol ETHW. This ETF is slightly more expensive at 0.2%, but has the highest total net assets and average volume as compared to the rest. You will be able to find these ETFs on any brokers that have access to the US market and allows you to trade crypto ETF. As for which is the best broker, I've done an entire video comparing all the fees and features of each broker in Singapore, which I will link up here. Additionally, I've also done up a free comparison spreadsheet, which you can use to find the best broker for yourself. But in case you're wondering, Personally, I'm using Interactive Brokers as my main broker, as it charges very low fees, has the best FX rates, and access to a ton of markets. Sign up link here if you wish to also use them. Next, if you prefer to buy your cryptos directly, there are a few additional steps involved. Here's an overview of how it works. First, you will need to find a crypto exchange that best suits your needs. Then, you will need to register and go through the KYC or know your customer process. After that, you can deposit your funds and buy the crypto that you want. And lastly, you will need to transfer your cryptos out of the exchange to your own wallet. This is because, as we have learned in the past, no exchange is truly safe. Even the so-called safe ones aren't 100% safe, as they aren't insured by FDIC or SIPC. If they ever close down, investors could stand to lose everything. So it's always best to transfer your cryptos out after buying them. In this section, I will first go through all the available crypto exchanges in Singapore, which are the crypto wallets that you can use, and finally, I will show a quick step-by-step guide as to how you can buy your cryptos and transfer them out. So here are all the centralized crypto exchanges that's available in Singapore. Take note that while some of them are licensed by MAS, there are some that aren't licensed. For example, as of making this video, Gemini has only gotten an in-principle approval from MAS, whereas Tokenized Exchange is currently being exempted from getting a license. In most cases, most investors can just stick to these exchanges. However, if you are looking to trade more crypto pairs or are looking for more features, you can find them in Binance and Kraken. Though, just be aware that both of them aren't licensed and regulated by MAS, so use them at your own risk, yeah? The next thing you need to know is that certain crypto exchanges have something called the simple mode and the advanced mode. Simple mode lets you easily convert your cryptos without any hassle, but in return, their fees may sometimes be higher. On the other hand, advanced mode comes with additional features such as order types, charting tools, and crypto pair filters. Plus, their fees tend to be lower. If you prefer to trade via the simple mode, Independent Reserve would be the cheapest exchange when you add up both the trading fee and the conversion rates. Otherwise, if you want cheaper fees and more features, you can trade via the advanced mode. For this, Upbit, Gemini, Tokenized Exchange, and Binance may be cheaper. Besides trading fees, you will also want to take note of each exchange's fiat withdrawal fee, trading volume, number of supported cryptos, fiat support, as well as whether the exchange allows you to withdraw your crypto or not. Next, once you have bought your cryptos, you will need to transfer them out to a crypto wallet. As the name suggests, a crypto wallet is essentially an application that functions as a wallet for your cryptos. However, one common misconception that many people have is that when you transfer cryptos to your wallet, they think that your cryptos are now sitting in their wallet. That is false. Instead, a crypto wallet only stores two things: your public key and your private key. You can think of your public key as your email address. Whenever you send cryptos to yourself or someone else, you'll be sending it to this address. This address is available to the public, and whoever knows your public key will be able to see what cryptos you have. On the other hand, a private wallet is the password to your address. Anyone who has your private key will have access to your wallet and all your cryptos. That's why it's important that you keep your private keys safe. Whenever you send your cryptos to your wallet, this transaction sits entirely online on the blockchain. It's never stored in your wallet. So if you ever lose your wallet, it's totally fine. All you need to do is use your seed phrase to regenerate your private key, and you have access to your cryptos again. Now, there are two kinds of crypto wallets: a hot wallet and a cold wallet. A hot wallet is typically an app or an extension that sits in your browser or in your phone. It's always connected to the internet. Some examples of a hot wallet are MetaMask, Trust Wallet, or my personal favorite, the Rabby wallet. They are free to use and they let you easily access your cryptos anytime. However, since they are connected to the internet all the time, they can be vulnerable to cyber attacks. Hence, they are only suitable if you wish to do regular trading and make quick payments. For cryptos that you wish to hold long term, it's best to use cold wallets. For this, two of the most popular cold wallets are Ledger and Trezor. The reason they are safer is because the private key sits offline in the device, and there's no way for hackers to access them over the internet. These cold wallets can cost anywhere from few $10 all the way to $600. But personally, I would recommend to just go for one of the cheaper ones, as this is something that you don't often use and you don't really need all that fancy stuff. So something like the Trezor Model 1 or Ledger Nano S Plus would work best for majority of people. Again, I have links down in the description below if you wish to get any of them. Now, Here's how you can buy your cryptos on an exchange and transfer them out to your wallet. Here, I'm using Coinbase. If you are using other exchanges, don't worry, as the process is almost the same no matter which exchange you are using. To buy cryptos in the symbol mode, over to the right, you can choose how you want to pay for the crypto. In my case, I'll be using SGD wallet as I want to be buying with SGD cash. Currently, the wallet doesn't have any money, so I will need to top up money to it. To do that, I can click on the top up SGD wallet, then choose the payment method. Then I will go with Pay Now as it's the most convenient method. I will then need to scan the QR code via my mobile app, then transfer the money over. Here, I've just transferred $20 into the account. The next step is to choose which crypto that I want to buy. Let's just go with Bitcoin. Enter the amount of crypto that you want to buy, click Review Order, check through to make sure everything is correct, then click Buy Now. And tada! I've successfully bought my Bitcoin. Now, if you wish to have access to more features in Coinbase, you can switch over to the Advanced mode by clicking on the Advanced toggle at the bottom left. Search for your trading pair, enter in the amount, and you are done. As mentioned earlier, when you are buying cryptos via the Advanced mode, the fees will typically be cheaper. The next step is to transfer the cryptos that I've bought over to my cold wallet. To do that, I will click on the transfer button at the top right, click Send Crypto. I will then need to enter the address that I want to send to. To do that, I can just click on the To Input field, select the network that I want to use, then at the top, I will need to enter in my address. For that, I can just open up my Ledger Live, over to the left, click on Receive. Choose the accounts that I want to use, click Continue. It will then ask me to connect and unlock my device. Once that's done, I'll be able to get my wallet address. For privacy reasons, every time you want to make a new transaction, Ledger will give you a new address. But don't worry, as all your old addresses are still usable. The only thing that will remain the same is your private key. Once you have found your address, click Copy, head back to Coinbase and paste it in. You will then need to enter in the amounts that you want to send over. If this is your first time transferring, start with a small amount first, like $5 or $10. That way, you won't lose all your cryptos if you accidentally make a mistake. Click Previous Send. You'll be required to select your wallet type. Choose Self-Custody Wallet, and here, you will need to do an ownership verification. This is a requirement under the Singapore Travel Rule. But here's the funny thing. How can you verify your wallet if you don't have any crypto in your private wallet in the first place? One way to solve that is by first linking your Coinbase account with the Coinbase wallet. Transfer the crypto over to the Coinbase wallet, transfer them to your Ledger wallet, then finally transfer some crypto back to your Coinbase account to prove that you own the ledger. Yes, I know, it's stupid. Otherwise, another way to solve that is by using other exchanges on the list that don't require you to perform a small deposit test, such as Crypto.com, Independent Reserve, and OKX don't require you to perform any tests. Otherwise, if you are using CoinHako, you can use something called a signature method to verify your wallet, where you use your private key to sign a message. Anyway, once you have transferred your crypto, you will need to wait for a while for your crypto to arrive. Depending on the network and congestion at the time, it might take anywhere from a few minutes to several hours. Coinbase lets you check the transaction status via the Blockchain Explorer. If it is still in progress, it will say pending. Once the transaction is done, this will change to confirm and you will see your crypto in your private wallet. So that was a quick guide on how you can buy cryptos and transfer them to your own wallet. For full step-by-step guides, I've made in-depth tutorials for almost all of the exchanges available here in Singapore, as well as how you can transfer them to your wallet. Next, in some cases, you might want to use a decentralized exchange instead. This could be because the cryptos that you are looking for aren't listed on your exchange, or it could also be because you find that it's cheaper to use a decentralized exchange. So here's a quick tutorial on how to use a decentralized exchange. For this, rather than using Uniswap or PancakeSwap to swap, a better way is to use aggregators, such as DeFi Llama Swap or OkuSwap. That's because they will go through multiple decentralized exchanges and liquidity sources to help you find the best possible rates. To get your cryptos into here, first, head over to StraitsX, which is a service that lets you convert your fiat currencies into stable coins. So let's say I want to deposit SGD. I will choose XSGD, click Bank Transfer, then click Transfer In. You'll be given a bank account information to transfer to, so just do that. Once that is done, you'll see your XSGD account being updated. For example, here I've deposited $20 into the account. Next, I want to transfer this XSGD over to my wallet. To do that, click Transfer Out, XSGD, select Blockchain Transfer. You'll be asked to select a network. The network with the lowest gas fee is Polygon, So let's choose Polygon. Click link blockchain address, then click link with your wallet. Personally, I'm using Rabby wallet, but I can also click MetaMask to connect StraceX to my Rabby wallet. Then just do all the verifications. Once you are done, click on MetaMask, then enter the amounts that you want to transfer out to. Take note that the minimum transfer amount is 10 XSGD. Click transfer out and confirm the transaction. After a few minutes, you'll see XSGD arriving in your wallet. Next, head over to a DEX aggregator. In this case, I'm using OkuTrade, but you can use any one that you prefer as the process is exactly the same. Click Connect Wallet on the top right hand corner, choose your wallet. Next, since my XSGD is on the Polygon network, I want to switch over to the Polygon network. Change the initial crypto to XSGD. Enter in how much you want to convert, then choose the crypto that you want to convert to. Let's say I want to convert to Aave, but I'm seeing many different results that have the name Aave. So to make sure that I've selected the right crypto, what I can do is head over to the crypto page in CoinMarketCap, click the down arrow besides the contracts page, and you'll see all the contract addresses for this crypto. I'm using the Polygon chain, so let's scroll all the way till I see Polygon. Copy the address, head back and paste it in. Click on the crypto, click swap, then just confirm everything that you see. But then you will now come into one issue. Here, it says that I don't have enough gas balance. Basically, whenever you want to perform any transaction, you will need to pay some gas fees. In this case, since I'm using the Polygon network, I will need to have some Polygon to pay for the fees. But how do I even get Polygon in the first place? There are two ways you can do that. First, you can either head back to your crypto exchange to get some Polygon and send them over to your wallet, or second, which is my preferred method, is to use the gas accounts feature on Rabby wallets to pay for the gas fee. Let me show you how this works. First, open up Rabby wallet, then click on the balance on the top right. This is your gas account. Here, you are able to deposit anywhere between $20 to $500 worth of stable coins into this account. And whenever you need to pay for the gas fee, Rabby wallets will auto convert your stablecoin into your gas fee. So let's try depositing some USDC into the account. To do that, head back to StraceX, deposit in some XSGD, swap it to USDC. Then transfer your USDC via the Polygon network to your crypto wallet. Once it has arrived, tap on the gas accounts balance on the top right and deposit USDC in. Don't worry, as you can always withdraw the money in the future whenever you want. Once that's done, head back to the Decentralized aggregator, then click swap. And this time, when it says that gas balance is not enough, you can just switch to using your gas accounts to pay for it. If you aren't in a hurry, you can just change the transaction speed to normal to save on some fees. Then confirm the transaction. Once the first transaction is done, you will need to confirm a second transaction to approve the token. Again, use the gas account to pay if you don't have any gas fees. Finally, once the transaction is done, you'll see the crypto in your wallet, and now you are free to do whatever you want with it. As you might imagine, if you buy some cryptos here, send some cryptos there, while also keeping your cryptos in your core wallet, things could get messy real fast, as you will lose track of how much crypto you have and what's your profit and loss. In that case, you might want to use a crypto portfolio tracking tool. Personally, I'm using CoinStats. The nice thing about it is that it lets you connect to most of the major exchanges and crypto wallets. For example, here I've connected to some of my wallets including Ledger. And don't worry, because it doesn't have access to your private key. All it is doing is just taking your public address and tracking everything that you have. From here, you can see things like your portfolio breakdown, profit and loss charts, historical transactions, and so on. So that's super useful. For most people, you could just stick to the free version, as it lets you connect to 10 portfolios while tracking 20,000 transactions. If you need more than that, you have to upgrade to a paid version. Again, you'll find all the links in the Google Sheet down in the description below. Lastly, let's talk about some of the best practices to keep your cryptos safe. 1. Always turn on two-factor authentication on your crypto exchanges. The one that you want to use is an authenticator app and not the text message. That's because if you are using an authenticator app, it's almost impossible for hackers to gain access to your account. Whereas if you are using a text message, you are vulnerable to SIM swapping, where the hacker can just gain control of your phone number and intercept your 2FA. 2. Never ever connect your core wallets to any decentralized apps. If you are connected to any scammy app, or if the app is hacked, hackers will be able to drain your entire wallet and you will lose everything. The only action that you'll be performing on your core wallet is to send and receive crypto from either an exchange or a hot wallet. That's all. If you want to interact with a decentralized app, you will need to first transfer your crypto out to a hot wallet. Then use the hot wallet to connect to the app. That way, only your hot wallet is ever at risk of being hacked. 3. There are lots and lots of scams out there. For example, the most common one is people impersonating a famous figure, and they will ask you to transfer money to them and they will help you trade. Don't ever do that. Then sometimes you'll see people asking you to check out some crypto projects or claim some token. Again, don't do that. And finally, if you ever want to invest in a crypto project, always do your own research and make sure you are investing with the money that you can afford to lose. The percentage of cryptos that have failed is astonishingly high at 70%. Anyway, that was a rather long video on how to invest in cryptos. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.